Have you missed it? Like, do you guys think, oh, I should have got in on Bitcoin?
I don't spend a lot
5 years ago.
Bitcoin.
And Bitcoin is something that certainly a lot of people think, is going to rise as an alternative currency.
The Australian Bitcoin Podcast, presented by Half.
It's not a currency, it's not money. I don't understand it.
G'day folks, welcome to the Australian Bitcoin Podcast. It's been a minute and I don't have my regular offsider with me today, unfortunately. He's on a farm. I don't want to dox him, but he's on a farm and his internet is pretty ropey. So we miss you, Mike, and we'll see you on the next episode. But not to say that, this is Mike's replacement by any stretch of the imagination, but I got to say, I'm pretty damn chuffed that we have Mr. Pete Dunworth in the house to elucidate us on the goings-on in Bitcoin over the last couple of weeks and shine a light on some of the things in the pipeline that are coming down. So, g'day, Pete. How you going?
Life is beautiful. Good to be with you.
Yeah, it's awesome, mate. We got a new all-time high just a couple of days ago, really, 4 days ago at time of recording. Might actually just do an all-time high price here. So we've got we're recording at 120,000 USD, which is roughly 185,000 pesos, Pacific pesos, and this is a good thing. We've got we're a couple of percentage points off the all-time high, 2.10%, which is nothing. And we hit the all-time high of 123,000 USD back on the 14th, which was exciting.
It's amazing. And to me, the biggest thing about this all-time high is, you were a couple of percentage points away from it and no one's talking about it. No one's excited about Bitcoin. This is the funny thing. So I think this bull market's got a long way to run if the current sentiment is anything to go by.
Yeah, I'm right there with you. I got to be honest, I'm not feeling too much at 123. I mean, when it was ripping the other day, it's kind of like having a packet of Skittles or something. Like you get a little sugar rush for all of, a couple of seconds. And then you kind of realize when you compare it to its price relative to inflation, like it should be well over 200,000 in order to reclaim our purchasing power, I suppose, that's been eroded since the last, proper all-time high of, what was that, 90,000 roughly in 21.
Yeah, and it still hasn't reached all-time high versus gold. If you pair it with gold, it's still 12% below that. So I think Bitcoin's got a lot of work to do from here. It's fun to see, but maybe that's why no one's really that excited about it. Every Bitcoiner understands inflation, debasement, and just how underwater we really are with our existing currencies. And Bitcoin hodlers aren't really happy until such time as they've reclaimed the real all-time high, inflation adjusted or adjusted to the gold price.
So would you count yourself as fairly nonplussed about this current price rise, or are you getting a little excited?
It always puts you in a better mood seeing a little bit of a pump. I'm not going to lie.
This is true.
And our greatest advocate for Bitcoin is price pumping. So if we want more Bitcoiners in here, as much as we love Bitcoin and we want to see it succeed, and we think it's a great tool for human freedom and empowerment, self-sovereignty, and a whole host of other reasons, the big dog in the room is price pumping. And when price pumps, people want to buy it. It's, back to our primal driver, I think, greed and fear, and people don't want to miss out, and people get greedy when they see that price pumping. So they want some exposure to it. So from an adoption perspective, if we want Bitcoin adopted, then there's no greater adoption tool than watching Bitcoin pump. And historically, you've seen people pile in at the top and then either wait 4 years to recover or sell their bags with a 50% loss in 6 months and turn their back on Bitcoin and say, oh, well, that didn't work.
It didn't work. I guess for new listeners and for people that are new relatively to, I guess, the Bitcoin space, Bitcoin price action, and I've got a few friends that are relatively new to these price pumps. It is exciting because they're in front, right? They're in the green, and they're happy days, and we all are too, I suppose. Depending on when you first made your first buy, but I guess maybe there's a little bit of PTSD from that 2021 run up where there was pronouncements of 200K by conference day, and all of these sorts of memes were flying around. And obviously these are memes, these are just speculation and price, throwing things out there. But I guess if you had it in your head that, we really, and let's be honest, like fair value Bitcoin is significantly lower than fair value. Let's be honest. It's got a lot of work to do before it sort of can make me feel something personally. But I'm hard to please.
Well, hopefully this cycle will get a blow off top that sort of rekindles some emotion. It sounds like you're dead inside.
I don't know. It's just constant, constant barrage. But honey, look, it is good, and I don't want to be the Debbie Downer in the thing. I think some of these, you had Ray Wang from Constellation Research. He was making predictions that Bitcoin's going to surge to 150,000 within 6 months, hit 200,000 by early 2026. A lot of these are quite conservative, bearish numbers, if you ask me. But I'm a bulltard, so.
Well, I suffer that same fate that you do, but I think it's a better place to live. I'd much rather be wildly optimistic than a glass half full kind of guy. I think it's a great way to live life, and it makes everything that much more enjoyable when you see a positive to it.
Are you looking for a simple way to buy Bitcoin in Australia? Hardblock makes buying Bitcoin easy. As Australia's longest running Bitcoin exchange, our mission is to help Aussies simply and easily buy Bitcoin and take it into self-custody. There are no deposit or trading fees, just a clear 1.2% spread whenever you buy or sell, lol. That covers our operating costs, so you always know exactly what you're paying. Withdrawals at just $1.18 AUD or as low as 400 sats with AutoSend. No hidden charges, no surprises, just a fast, reliable and easy way to stack sats with total transparency. Get started today at hardblock.com.au. Bitcoin made easy for Aussies. Yeah, no, I agree. I mean, you've got some of the most ludicrous wouldn't be too mean of a way of describing some of your prize predictions. They are rationally ludicrous would probably be more precise. Yeah. Some of the things that I've heard over the last couple of years, it's been pretty amazing. And I mean, are you still holding on to this kind of calculations?
Yeah, I think as days go by, we get closer and closer to it. The big thing that I see happening is Bitcoin is, on one side, there is growing demand on a daily basis. Most importantly, there is less and less supply available, or available supply, which just goes into the economics. And people are really starting to understand that I don't think was really apparent 4 years ago or pre-COVID, just how pernicious the debasement of our currency has been. Most people were happy to sleep on it and let the government get away with, say, a 2% inflation rate. But what's come to pass, and I think the broader retail investor or consumer, it doesn't really matter, is now not only aware that the CPI number is a lie, and it's a total fiction that the government makes up to make us feel better, but what isn't on our radar and isn't being discussed, but we're completely aware of it, is the debasement. And so when you add, I guess, the made-up number for the inflation rate with the CPI with the number or the amount they're debasing us per annum, we're getting into double digits that we're getting ripped off, or that our value is getting sequestered away at, without getting a vote in it. And that's the major issue. I think if we had a vote in it and said, okay, for social cohesion, we've got to pay 10% extra on everything per annum, basically 1% a month, at least that's a conversation. But when you don't have any say and you're voting in people who are meant to be acting in your best interests, and there are government organisations who are actively robbing you, might be too strong a term. Some would say it doesn't go far enough, but they are effectively undermining and taking value from you by debasing the currency. I think this is a huge issue that a lot of Bitcoiners in particular are acutely aware of, and this is probably one of the major reasons why we Bitcoin.
Oh, without a doubt, because it's. I did a presentation actually for Hard Block earlier this week, and it was a room full of people new to Bitcoin. Their boss had been actively trying to onboard them to Bitcoin. I'm pretty sure he paid their bonuses in Bitcoin, and so they got sort of lumped with a chunk of change. To be perfectly honest, it was quite generous, and I was trying to articulate, like, I know in dollar amounts, this might not seem a heck of a lot. I mean, it's pretty decent. In Bitcoin terms, this is a lot of Bitcoin you've got here, and trying to articulate the value prop to them, and doing that by explaining the problem of inflation and the underreportedness. I mean, one of the stats I came up with was when the dollar was first floated in 1966, so 59 years ago, there's been a roughly 94% price purchasing devaluation in purchasing power since then, which averages to roughly about 4.5% per annum over that 59-year period. And so there was a time when it was you'd get a 2% raise at the end of that financial year. And I can remember working and the announcement was made, and I used to think, oh, that's, isn't that nice? Wow, gosh, 2%, a little bit more, that's great. Failing to understand that the inflation rate, the target inflation rate is 2%. So, you're kind of just maintaining, and then not grokking certainly that it's actually more than double that in real terms. And so trying to articulate this problem to a bunch of newbies that were, I guess, mindfully interested in this thing, but didn't quite understand the absolute devastation that is happening right before them. And this is sadly the case for the vast majority of people. If Bitcoin adoption is 4.7% globally, I think I read that the other day, we're down the bottom of that adoption curve relative to when the internet was being adopted throughout the 90s. We got a long way to go before we can get people to understand that even now, 4.5% is actually pretty generous. It's almost double digits if you're a Chapwood Index Pro.
It's wild. This I guess pertains to a bigger problem. I was speaking with a property developer yesterday, and we had a great conversation. You'll probably know exactly who I'm talking about when I refer to this, but he tells his story of being a successful entrepreneur, successful developer, and then realising that he's getting crimped every year by way of his internal rate of return. He's just not being able to meet the requirements on that because every year it gets more expensive to build. It's harder to make money, and this is where I think probably one of the things I look to first when it looks to come to allocate to Bitcoin is you need to understand what the opportunity cost is of not allocating to Bitcoin. So whether we like it or not, I think we can talk about Bitcoin and how wonderful it is, but you really don't understand how good it is relative to everything else until you actually do an opportunity cost on everything else out there. So stocks, bonds, commodities, property, and venture capital, private equity. You look at that and you think, every single one of those markets I look at relative to Bitcoin and think there is no way I'd want to have money in these sectors. Property, particularly Australian property, because I know this is a property like an Australian-centric podcast. We're obsessed with property in Australia. But I look at one of the key economic indicators I look at to to look at the outlook on the property market, there are basically three. The first two are pretty standard. You look at interest rates and you look at basically credit growth to determine what the future property prices are going to be. But the really big sleeper here, which is going to be very impactful on a long-term basis, is going to be the per capita GDP growth. And what we're seeing is this per capita GDP growth drop dramatically, while at the same time we've got a housing crisis. We're not building enough. It's too expensive to build. All of a sudden, Australians are getting poor out. Standard of living is dropping in the fastest out of any G20 nation. And I look at this and think, if you're a property investor, if you can see those signs, there is no way you want to be investing in this property market. You're on a hiding to nothing. And this is what we're seeing with a lot of people starting to figure that out, although they might not be able to articulate it. You can feel it. And we're seeing a lot of capital that was otherwise invested in the property sector start to roll to Bitcoin for that very reason. They look at this and think, hey, we're facing severe headwinds, and they can't quite put their finger on what the problem is. But I can basically tell you it's credit growth, interest rates, and fundamentally lower per capita GDP growth, meaning we're getting poorer, while at the same time property prices aren't really dropping. So I look at this and think, in order for property prices to really run, we need really good credit growth. We obviously need demographics growing, but we need really strong per capita GDP growth, which means we can afford more expensive properties. And we're just not getting that. It's gone the wrong way for the last 10 years. And I look at that, and a lot of property developers, a lot of property guys I speak to just are finding they're at that stage of denial where they're trying to work harder, they've got to work smarter. Oh, if only I did this. And that they don't realise that, without wanting to get too political, because I probably don't like either sides of politics, the governments really haven't set this system up to incentivise entrepreneurial endeavour and for you to go out and make a fortune, which is sad, because the alternative is you become more reliant on the government, and the government has to pay a whole host more for you. And probably one of the greatest lessons Bitcoin's taught me is to be self-sufficient.
Yeah. You remember that book, I don't know, Richard Scarry, there was a book he wrote called What Do People Do All Day? It was a book that I had on my bookshelf when I was a kid. And it sort of went through, it talked about Alfalfa was a farmer, and there was a baker, and there was Mrs. Pig, she was staying at home. And it was basically just a nice little slice of life of what people do within this particular town of Busytown, getting everything done. And they're all effectively independent small businesses running, entrepreneurial, businesses trying to create value for Busytown. And it made me think the other day, because I've recently found it and I'm reading it to my kids. And I just think to myself, what do people do all day in Australia? Well, they work basically for the NDIS, whether directly or indirectly. And as you just said, like the incentive to be entrepreneurial is quashed. I mean, the amount of, do you remember those corner stores that would just exist in random locations in suburbs, and they'd be full of, newspapers and candy and all sorts of things? Where are they gone? They don't exist anymore. And so these are all sort of just anecdotes, but I guess I'm agreeing with you in that regard, and the fact that they don't incentivize value creation, and because how do they pay for all this stuff? Everybody knows. Well, we can articulate it.
Take it from us, but this is the problem we're going to face. And if you look at the economics of the situation, we're getting to a point where probably, and this is a number I really don't like, is the GDP number. And our economists think, because they've been, I guess, they suffer from the Keynesian mind rot, believe that the government can contribute to GDP, when I just look at that and think it's not possible, because they're taking tax dollars from otherwise would-be spenders, savers, investors, and they're appropriating and transferring that capital to whatever their favourite pet projects are. But in Australia, we calculate that government spending is part of GDP. is
Right. So it's a flawed metric from the
correct.
get-go.
It just doesn't make any sense when you understand that. But there's talks that in Australia, somewhere between 30 to 50% of GDP is created by the government.
I didn't realise it was that high.
During COVID, 75% of Australians were taking money from the Australian government in some way, shape, or form. It's insane, not sustainable.
Yeah. So what percentage is 75% of, say, hardcore socialism?
Cool. Well, it kind of feels like we're already there because the policies being instituted,
Right.
I believe, are undermining any incentive whatsoever. The two pet peeves I look at, you look at the windfall gain tax, which is a property tax in Victoria, state of Victoria. If you have your land rezoned from rural to residential, the government will take 66% of the increase in that land value straight up off the bat. It doesn't matter if you've held that property in your family for generations. You could have held it for 150 years. They will take a 66% tax on the re-rating of that property. That to me, I think, is absolutely criminal, and the socialist state of Victoria wouldn't expect anything less from those guys. But where this gets, I think, a little bit more problematic is we now have the Treasurer of Australia, the federal government, thinking it's okay to have an unrealised capital gains tax on superannuation balances over $3 million without indexation. And just to put this in perspective, because I know we've got a pro-Bitcoin crowd listening to this, my expectation is if someone holds half a Bitcoin in their superannuation, which is currently $90,000, in less than 10 years, they will be paying this unrealised capital gains tax. And the problem, the whole reason for our superannuation system was to relieve the federal government of any pension benefits that had to be paid to retirees. And so you set this system up so that you remove the burden from the federal government to pay for these people in retirement. And in less than 2 months of the new administration coming in, or the new government coming in, we have totally destroyed a system that took 40 years to build. And this is, without wanting to go down this road, this is the problem that we have with, it's very difficult to build. It's much easier to tear down. And in the space of 2 months, they've effectively destroyed the superannuation system as we know it in Australia. Because I can tell you as an advisor, I don't want to have any clients putting any additional capital that they have to into this superannuation system when we don't know what the rules are, and it's trapped equity that can never be removed from it until such time as you meet the conditions of release. So until you're over 60 or 65 years of age, or alternatively suffer a total and permanent disability to access that to pay for your living expenses. To me, it's just such madness, and this is the problem we've got, where we don't have incentives creating great outcomes for our society. And sort of to put a bow on this, and sorry for the rant, this is where, to me, Bitcoin represents hope, because I've never seen a more beautiful system that aligns interests and incentives. And this is my hope and why I'm optimistic about the future, because as Bitcoin continues to get adopted into our day-to-day lives, there is nothing anyone can do but basically align their interests with the interests of the Bitcoin network. And if you do that, you benefit greatly. So I look at that as a saving grace at a time when we need that hope and an incentive structure that sets up for everyone to win, rather than the haves and the have-not system that we currently have.
So just on that unrealised capital gains policy, what does an average? I know a number of Bitcoiners that took advantage of setting up an SMSF, a self-managed super fund, and you can do that through Hardblock as well, and transferred their balance, whatever it was, into an SMSF, and completely allocated 100% to Bitcoin. And now they're all wondering, was this even the right thing to do? Are there even any strategies? Are there sly roundabout ways? Are there some sort of how are you thinking through this, say for even just your clients, who are all of a sudden up for like almost immediately, perhaps, given the high net worth individuals that you deal with, that might be up for, having to somehow come up with some money, even though they haven't actually realized any of that money. How does that work?
Look, with great difficulty. I think it puts everyone in a very tough position. Really, you don't want to have a significant super balance unless you're at retirement age, where you could withdraw that capital from the superannuation system and not pay unrealised capital gains tax. If you're under that age and you've got years before you can access it, you're sitting there scratching your head thinking, what are the ways that I can get this money out of here? I guess there are, say, 3 or 4 ways I've seen to mitigate this, and none of them are good. None of them are good. So please don't take this as financial advice in any way, shape, or form. Speak to your accountant, speak to your advisor about what you should be doing. But there are really 4 ways to do that. One, you just suck it up and you pay it. I did some calculations on this and figured out that by the time I retire in 17 years, this unrealised capital gains tax, if I'm able to sell every top between now and 17 years' time, I will get to keep 8% of my current Bitcoin stack.
Gee whiz. You mean so the remaining 92% is going to tax?
Correct. That's the very best outcome that I can hope for over the next 17 years.
That's if you can time the tops too.
That's assuming timing the tops. You may as well look out the window and watch a flying pig fly by if you think I can do that, because it's impossible. So I look at that and think it's a very demoralising situation to be in, and that term would be used in probably the most gracious terms possible. To think, and I do this for a living. I model out people's future and doing numbers. So it's not like I don't have any experience in this, and literally that's how I make my day-to-day living. But it's extremely demoralising to look out and think, I've spent 30 years working, contributing to a system that is going to rob me of 92% of what I've managed to accumulate to this date by the time I retire.
Demoralizing is being generous, very gracious.
Like, it's insane. So that's first, and that's really, there's not a lot of other options on the back of that, but I'll just quickly go through it. You have the ability, if you self-custody your Bitcoin, to lose that or send it to a wallet address or say goodbye to it, lose it. I would not recommend that, particularly if you're planning on lying to the government. I would absolutely think that's a massive no-no that could see yourself put in jail if you plan on going through that process. To me, freedom is the only thing that matters, so nothing is worth that. The third option is if you qualify for total and permanent disability, then you have the ability to remove your superannuation benefit before retirement age. Now, I'll leave that to you and your listeners to figure out what that is, but that's typically an insurance term, but in the world of self-managed superannuation funds, you as a trustee have the ability to assess the health of a member, and if they're unable to work in the future due to a total and permanent disability, then there is the ability for early access to your superannuation. The final one, and it's a little extreme, is you could move to New Zealand, exit out of your entire position in the self-managed super fund, roll it to an eligible Australian super scheme, and then roll that from the Australian superannuation system to the Kiwi Saver system. Now, the only problem with that is that doesn't allow you to hold on to Bitcoin in self-custody. You would have to take a proxy in the form of IBET or IBTC, or alternatively MicroStrategy, MetaPlanet. The list goes on. So sadly, there aren't too many great options available to us, and this is the problem with having a captured financial system in our pension system. And this is why it's so diabolical, because a lot of young Australians are going to be captured by this. Currently, the statistics around it show that maybe it will only affect 80,000 people. But if we have a Bitcoin adoption rate of 50% in the next 10 years, my expectation is if they've got $100,000 now in their super and they allocate that to Bitcoin, they will be absolutely captured by this unrealised capital gains tax in the next 10 years. So that number will be closer to 2 to 3 million Aussies will be captured by this unrealised capital gains tax.
Gee whiz. I mean, talk about a disincentive
Yeah.
to be in any way, shape, or form productive. Really, really. There's a local cafe I go to, and it's constantly filled with healthcare workers, effectively, and we need healthcare workers, and it's important to have them. But I've got a few friends that work in that sector, and again, it's anecdotal, but I look and I think, well, why am I busting an ass doing what I do when I could just, sit on 120K and go shopping effectively, like go to the caf. Mentally, it would just destroy me, and I wouldn't be able to. And I'm talking from a personal point of view, but so in that way, you decide, well, there are other ways to provide value and be of service and create a better future for yourself. And then you come along with a stat like 92% of your wealth that you've contributed to your future is evaporated, eviscerated, because they wrote down some words on a piece of paper and had a bright idea and didn't do any consulting or anything. And no disrespect to the treasurer, but I'm pretty sure he has a liberal arts degree, I think. And I've got one of those too, but I'm not the treasurer. So, yeah.
Well, you know what's more insidious? I told you what the best case scenario was, that I'm going to lose 92% of my current Bitcoin stack. The downside to what this is if Bitcoin goes up and does a 10x in a year, which I genuinely think is possible, and I fail to sell the top, at the end of that financial year, I've incurred, say on $3 million moving to $30 million, I've incurred a significant tax bill. If I fail to sell at the top and then Bitcoin does what Bitcoin does and it crashes 80 or 90% on the back of going up 10x, which stranger things have happened, and I don't I now have potentially liabilities within the fund that exceed the value of the balance of the superannuation fund.
The fund itself.
So I'm now trading insolvent. I have a genuine problem in that if you trade insolvent as a self-managed super fund, you lose your director's license. You can no longer maintain a directorship in Australia. Not only that, you then have a personal obligation as a trustee or a director of a trustee company of the super fund to make good on the losses that you've incurred as trustee of that fund. So you now have a personal liability to pay back the tax that is owed via your fund. So not only that, I get to lose my entire superannuation balance. I can't be a director of an Australian company. I can't hold an Australian financial services license. I can't give financial advice. I now have a personal liability owing to the super fund that is going to be paid back to the Australian Tax Office in the form of unrealised capital gains tax. And there's no provision in this legislation to mitigate any unrealised capital losses that I could offset. It fundamentally ruins me in bankruptcy. That is a worst case scenario.
Yeah, I can't actually comprehend that, Peter. I can't reconcile that in my brain, other than to potentially just go into politics, because they're exempt. Right?
And this is just the height of how serendipitous this is. They're all exempt from this tax, so they don't have to worry about it. They're okay. They're voting on issues that affect you and I without any personal consequences. Please make it make sense for me.
Yeah, I can't. And I'm of a generation that it seems that just about any kind of significant milestone that I've reached in my life, if you talk about graduating high school, uni, getting married, kids, that whole thing, there's been some catastrophe. It's been marked by some sort of crisis, once in a lifetime, once in a generation crisis. and you find this Bitcoin thing, and you do the due diligence, and you read about it, and you learn it, and you try and understand it, and you ask questions and all these sorts of things. And by rightly, you get excited about it, and then you think, well, this is the way. This is the way now, and it still is the way. There's no other way. And to think that at that moment of reaching retirement, permissible retirement, that you could just be rug pulled again, it blows my mind, to put it politely. It blows my mind.
It's unfair, and this is back to the demoralisation campaign that our current government is inflicting upon us. They don't want us to be successful, and sadly, there's
Imagine that. Imagine that. Voting in people that don't want you to be successful, contributing to a system that effectively doesn't want you to be successful, because that's really what it comes down to.
Yeah.
Or not even successful, just thrive.
Mm-hmm. Yeah, and these are the people who are meant to govern societies for the betterment of all. And look, it's maybe I'm in a bad mood. Let's talk more about Bitcoin so we can get focused.
I was going to say we might pivot this down for a little bit, but I mean, so at the end of the day, though, it is Bitcoin is one of the greatest, if not, it is the greatest asset that you can direct your time and energy towards, irrespective of the superfluousness of what goes on in and around it. We're reaching, we've reached all-time highs. There's constant news all the time around Bitcoin treasury companies and countries. Interestingly enough, the United States government just the other day, by Lola Leitz, she did a FOIA request and found out that the US government didn't actually own the 200-odd thousand that they thought they did. It's closer to 28,000 or 29,000, which is valued roughly around about $3.4 billion, based on sort of current prices of 120,000 per coin. This is interesting because, as Lynn Alden says, nothing stops this train, and there's the sort of thesis out there that Bitcoin would be used as a fulcrum or a tool to absorb that $36 trillion in debt somehow. And one of the I guess the levers here was this presumed 200,000 Bitcoin. What happens? What are you thinking about this particular story, Peter?
I think it'd explain a lot of the volatility that we've had in the last 6 months. There was an expectation that they had 200,000, and upon review, they've got 28,000. There's a lot of room to move there, and a lot of selling that's gone on. There's, I guess, thoughts and discussions around the fact this was a poison pill that the Biden administration left Trump because they knew he ran on it and wanted to build a strategic Bitcoin reserve. To me, I look at this and think, if those statements are true, in fact, that those, call it 170,000 coins were sold in the last 6 months, and Trump wants to honour his promise to the Bitcoin community in building a strategic Bitcoin reserve, which is questionable at this point in time. There's 170,000 coins that need to be purchased in quick time. And this is just, I look at the setup that we've got right now, and you know what I'm really positive on? I'm positive on the Bitcoin price. We're at all-time highs. No one's talking about it. No one's excited. We've got major catalysts that could bring a host of new capital to the space. You've got the US government. They're short 170,000 coins on what they said they had. Now they need to go out and make up for that. So how quickly are they going to do that? That's going to cost them a fortune now. So I look at this and think that story, although it's disappointing to think that they have a lot less than they had, is wildly bullish for us, because they would have had to have been selling that down over the last 6 or 12 months. And at the same time, they're going to have to step back in and buy what they sold. So I think there's only one thing that's distinguished itself from, I guess, the failure of Germany, who was it last year or the year before sold 60,000 Bitcoin down, and they're now down billions of dollars in relative terms to what they could have had today if they just held onto it. Hopefully, the US learns the lesson quicker than Germany does, and they start buying and accumulating, and this is one of the major factors that I think is why we're in a really good position now relative to all other previous cycles, because we haven't had buyers of this size stepping in to basically put a bid in the market. We've now got the federal government, the US, the largest economy in the world, having to buy 170,000 just to get back to break even where they were. You also have the Bitcoin treasury companies putting in bids. To me, they're better custodians, excuse me, than the Bitcoin ETFs, because the Bitcoin ETFs, whenever a unit holder sells, they have to sell Bitcoin to get the cash to provide to the unit holder. So when a shareholder of the Bitcoin treasury companies sells their stock and wants their cash out, MicroStrategy, MetaPlanet, whoever it might be, they don't have to sell any Bitcoin for that. That's just a trade that goes on the market. But their Bitcoin stays put. So I look at this and think there's such a wave of capital coming to this space that I just don't think we've really thought through what happens when this volume of capital hits a digitally scarce asset with absolute scarcity. This is the fun part. We just get to speculate on when that happens and how that happens. And it really is just upside from here.
It does. I mean, obviously, in light of what we've been discussing, it sort of the excitement for me personally is tempered somewhat. But that whole face melting. I mean, I struggle to see if it was to rip, an enormous amount of capital was poured into this thing suddenly. To use a sort of Parker Lewis term. How quickly does this thing rip? And I guess it probably, you've got sell pressure at that point, so it'll just constantly, it'll hit that point. Maybe some whales will come in, some OGs, and they'll be like, sweet, we're at 500K, whatever, and they'll just dump, a chunk of change. But what does that look like, that compression?
I think it just takes time. And this is the beauty of sort of being a long-term Bitcoin hodler. You can be patient. You can sit there and watch what's going on and think, as long as you've got no leverage in your portfolio and you're comfortable, you don't have to sell anything. You just sit there and wait and watch and let this all unfold in front of you. And the weight of capital that's coming to this, I truly don't think people really understand. And one thing that will sort of, I think, open up everyone's eyes to just how much capital is yet to come here. There is circa $60 to $70 trillion in bonds that are refinanced every year. These Bitcoin bonds, if they repackage them on the 5-year, have the ability to get 20% of that capital into Bitcoin on an annual basis. So I look at this and think there is $14 trillion worth of capital that could come into a market that's only $2 trillion in size. And that $14 trillion needs to fit into maybe 2 million coins that are currently available for sale at any one point in time. The number's going so much higher.
Interesting.
So much higher.
Phase melting. Okay. There's a few loan products coming down the pipeline as the space is maturing. There was one announced this week actually by Block Earner, which they apparently launched the country's first Bitcoin-backed home loan after fighting with regulators in court over a couple of years. And it's not collaborative custody. They are held in, they take custody of the coins. I think there's a caveat with regards to the ownership because it's a mortgage. You don't need, it doesn't instigate a CGT, capital gains instance, but you don't hold the coins. And I haven't looked into the product too much. It says through the product, borrowers' collateral tokens are secured by custody platform Fireblocks. Now, I'm pretty sure Block Earner are also dabble in altcoins. So that tells you everything you need to know. Being a Bitcoin-only company, Hardblock, we're first a Bitcoin-only company in Australia. You've got a product that's, I guess, related to the Bitcoin advisor, LoanMyCoins.com. I've seen this around. I've seen tweets about it. I've seen Andy, your partner, tweet about this. I'm still confused about it. Can you explain to my left curve smooth brain how this product works?
Well, it's a very unique product. I think it is the first lending product with genuine innovation that's been released in a long, long time. It is a Bitcoin to Bitcoin denominated loan. So you look at that and think, what does that mean? You effectively put up Bitcoin as collateral and you can get 95% loaned against that. So you put in one Bitcoin, you get 0.95 of a Bitcoin back. And the unique thing about this is a Bitcoin that's a Bitcoin loan. And the Bitcoin loan is not a Bitcoin to fiat loan. It's a Bitcoin to Bitcoin loan, which means in order to repay that loan, you need to repay it in the form of Bitcoin. So your hurdle rate for the use of the funds needs to be something that's performing better than Bitcoin. And I've got to say that is an exceptionally difficult thing to do. And if I look at where we are at this point in time, there are probably three use cases for this product. And I talk to a lot of people about this and it's garnering a lot of interest. And I'll briefly talk on why. The reason why this product seems so revolutionary, so interesting to people is probably 3 to 4 things. The first is that it is a 95% lend. That right there is a huge increase to the traditional loans that are out there. Most loan to value ratios on Bitcoin loans cap out at about 60, maybe 70 if you find someone who's really aggressive. But this is a 95% loan, so this totally smashes everything else. The next thing that's unique about this is that there is no margin call with this. And you'd think, how on earth is that possible? How can you not have a margin call on a product that's lending you 95%? And the thing is, because it's Bitcoin to Bitcoin, not Bitcoin to fiat, there's no foreign exchange on it. It's a local currency to local currency. So you don't have the catch of having a margin call. The other thing is because you pay that loan back in Bitcoin, that's the reason why you don't have a margin call. The third is there's no counterparty risk on this loan. And the problem with all Bitcoin loans, as they're presented at the moment, is that you have counterparty risk. So I look at, say, the best lenders on earth at the moment in Bitcoin from a custodian and removing counterparty risk. The 2 companies that come to mind for me, or 3, would be HODL, Debify, which is one and the same, and Unchained. Mm-hmm. Those three lenders out there in the marketplace, they use multi-sig. You hold one of the keys, and they then have 2 other key holders, so they control your Bitcoin, but you can see it on chain at all times. But still, you have counterparty risk for the duration of that loan until you pay it off and get your Bitcoin back. The beauty about this is that you don't have any counterparty risk other than the 48 hours that your Bitcoin is in escrow at the start of the loan. So you can have up to 5 years with no counterparty risk, and that comes down to the way we structured the loan agreement to protect the borrower from any further legal action in the event that the lender goes broke. So this is a key distinction. Because the contract has been structured in such a way, you protect yourself from any counterparty risk. And I'll just explain the counterparty risk of a lender going broke. I was fortunate that I did not have funds exposed in the lending side of BlockFi or Celsius, but I'll use them as an example because it's a pretty good one. When BlockFi went broke, if you had a loan with them, the problem with that is that not only did you put your Bitcoin up as collateral to borrow, say, $1 million, you then took that $1 million, went and bought more Bitcoin, and then put that $1 million worth of Bitcoin into additional collateral on the loan. So now they're holding $3 million worth of collateral on $1 million loan for you. And when they went broke, not only did they lose their Bitcoin or your Bitcoin, but you were then left with the creditor process or administration where receivers get appointed, liquidators come in, and then they basically go through the assets of the company and they figure out who owes the money and what's worth what. And now those assets are sold off to third-party creditors, and now you as a lender or a borrower with BlockFi had to deal with a third-party creditor. BlockFi's lost your Bitcoin. That's done and gone. Now you're dealing with someone who's bought a credit obligation from you for maybe pennies on the dollar, and they're turning around saying, you owe me $1 million. It's like, hang on a second, you lost $3 million of my Bitcoin. What the fuck? Pardon the French, but you'd be kind of annoyed at that process, right? Now,
A bit.
back to LoansMuch coins and why this is different is because the way we've structured the legal agreement in that contract, if the lender goes broke, that's no problem. There's no counterclaim from a creditor or the company that's in receivership or administration, Chapter 11. It doesn't matter. You don't have any. They have no claim on the Bitcoin that they've given you, and this is what's truly unique about this product. So that's the second or third point. No counterparty risk once you get past the escrow period, and that can be for up to 5 years. So you could literally be, doing your thing with whatever you want to do for a 5-year period before you have to then renegotiate loan terms and extend that further.
So to get it into, because you are effectively borrowing Bitcoin off the back of like putting up Bitcoin as collateral, you're still not touching fiat rails, which means you may not necessarily be able to interact with the fiat system. Like, for instance, if you wanted to use it to finance a business or a holiday, a house, whatever.
You could, but I wouldn't do that. And the reason being is that because you've got to pay back Bitcoin, you want to find an asset that's performing better than Bitcoin. If you can't, then I guess there are 3 use cases for this. One is you've got a trade or a position on for the next 12 months. You don't want to incur a tax bill by selling some Bitcoin now, but you'll sell it in 12 months' time to realise what you need to pay off. The second use case is you can find an asset performing better than Bitcoin, and I'll share an example that I put together. Recently, I put up some Bitcoin to do this very trade. Say, for example, I put up 10 Bitcoin, I got 9.5 Bitcoin back. I then sold that, went and bought MetaPlanet because I thought that could outperform Bitcoin in the short term. Please note, not financial advice. Do your own research and every other disclaimer that I can think of on that. But in this case, when it came to the investment in a Bitcoin treasury company, this loan product is probably best suited for that use case because what it allows you to do over every other lender in the marketplace is probably 3 major functions of it. Firstly, it allows you to double your exposure to that investment because you can borrow at a rate of 95% versus 50%. Or alternatively, you can put up half the amount of collateral because you get effectively 100% lend on it. So you only need to put up or risk half as many coins for the same exposure. And then the killer use case is that you've got no counterparty risk. So, you're not going to lose your coins.
So in a world of Bitcoin treasury companies, and this is obviously, again, none of this is financial advice, but notionally you could take this product, loadmycoins.com, and as you said, buy equity in a Bitcoin treasury company like MetaPlanet, potentially MSTR, things like this, where you can get exposure to those things in the short term. Generally, they potentially would outperform Bitcoin, which is what they have done historically. And you can then pay that loan back and take any kind of profit off the back of that trade, right?
So it's a small window of opportunity for those treasury companies. I think Bitcoin's the best investment I've ever seen. On a personal note, full disclosure, the first time I've allocated any meaningful amount of capital outside of Bitcoin in the last 10 years has been to these Bitcoin treasury companies because I think there is a small window of opportunity to get outsized returns. But to me, the be-all and end-all is Bitcoin. It's only in an attempt to get more Bitcoin. The final use case for that loan is it might be a really cheap way of putting a put option on Bitcoin. If Bitcoin goes to $1 million overnight and you want to short it, a 5% fee to short it is cheap. It's best value short you'll get on the market. So for that reason, if you're a brave man and a lot smarter than me or crazier, if you're going to do that, hey, hats off to you. I would try and talk you out of it. But stranger things have happened. I would not want to be shorting Bitcoin.
No. I mean, so that's certainly cleared up that product for me, and I grok it now. I think I grok it a lot better than I did before we started that conversation. Maybe we'll just quickly pivot to the BitcoinAdvisor.com, which was one of the first services that you spun up with your colleague and your partner Andy, and obviously you've got Bitcoin Super off the back of that. But the Bitcoin Advisor, I think, is the core value prop here, and it's helped a lot of people to kind of get their head around what Bitcoin is, how to secure it properly, how to onboard, and these sorts of things. So, give us the light shill on that.
Well, very briefly, we just want to help every Bitcoin get off exchange. And I look at a lot of people don't really understand Bitcoin or how self-custody works. It's really a service to help people self-custody their Bitcoin. That's all we want to do. And we want to put that in a framework that is going to help protect, say, new people to Bitcoin, or maybe people who've got a big stack of Bitcoin and don't want to keep the mental intensity up of being responsible for it. We want to help people self-custody it in a framework that gives them the ability to have multiple or to remove any single point of failure on that self-custody, because it's all good and well to hold Bitcoin, but if you can't recover it on your death, then it's kind of a moot point. It's a pointless endeavor. So we do a lot of work focused around estate planning protocols for the recovery of your Bitcoin in the event that you are to pass away untimely. And it's a great service for people who are wanting that reassurance. The other thing that I think is really powerful about that service is because you're working with an expert in self-custody your Bitcoin, it increases your confidence levels dramatically. And the thing about increasing that confidence level, and this is where I think it's a perfect match for any exchange, because we can increase confidence levels of clients quicker than any other service out there, it allows clients to then allocate more resources to buy more Bitcoin. And one of the proudest things of this service for me is once that conversation's all sorted about the recovery and safety of your Bitcoin or security of your Bitcoin, once that conversation's had, then we can have the conversation about how do we get more Bitcoin. And a really fascinating stat for us is within the first 12 months of clients working with us, on average, they increase their Bitcoin stack by 71%.
Yeah, right. Good grief. It's all about education and overcoming that hurdle, right? And that's one of the things that has led us here at Hardblock to develop the learn.hardblock website that we've got, so learn.hardblock.com.au, where we've just got a list of really super basic 101. If you're super new to Bitcoin and you just want to get the ground, you can go and familiarize yourself with that. And we've also have the complimentary Zero to Hero newsletter, which we literally deliver super basic, short, sharp, and sweet lessons about Bitcoin direct to your email, which you can sign up to at learn.hardblock.com.au as well. But those in conjunction is sort of like mitigating that friction, those friction points, such that you can have the confidence to understand Bitcoin, the confidence to therefore buy more Bitcoin, take it into self-custody, using either, the tools at your disposal, independently, or if you need your hand held and you need that little boost of confidence, that concierge type service, you've got something like Bitcoin Advisor to help you with that. The space is maturing at a rate of knots, really, isn't it? It's never really been a better time to get into Bitcoin.
I think so. And when we first started, we were pretty much the only service doing that. And I think there's a whole host of others out there now, and it's wonderful. Like, I think more competition in this space, the better. Not that I really feel that we do have competition, but having customer options or client options to seek different services is wonderful. And shout out to some of the work that you boys have been doing at Hardblock with the protocol you're putting together. I think it's wonderful. It's really good.
Yes, we're very excited about that here at Hardblock. We're not going to leak any alpha today. It's still very much under the hood, under the cover. But watch this space to anyone that's listening, because there's going to be we've got some really cool things coming down the pipeline with respect to helping you get the confidence to custody your Bitcoin yourself and keep it secure. But mate, we've been yakking for roughly an hour, and I think we've come back to a nice happy point. We got pretty low there for a minute there. And I think that's it's the reality. We've just got to sometimes acknowledge that, and I guess through acknowledging it, you can actually find ways to fight it and to mitigate it as best you can. Even though it looks relatively dark right now, they're not sending their best. Let's be honest. So let's just keep pushing, keep grinding, and we'll just see where this Bitcoin project can take us. And I personally think it's going to take us to a higher level of consciousness, and we'll get to an extra level of civilization that will just make the world a better place. That's my hope for it. And it might sound idealistic, but fuck you.
It's a beautiful, beautiful, beautiful outlook. I'm with you.
So thank you very much, mate, for coming on the Australian Bitcoin podcast today. I apologize that my co-host Mike wasn't able to make it, but we riffed on some decent news and we dug in really deep. Let me, I guess, just for the speculators out there, where are we going to end the year, price point wise?
Between 180 and 250, I'd say.
Okay, all right. Well, we're at 180 already in Australian dollars,
right.
So we're doing right.
270 to 360.
Beautiful. Pete, thank you so much, mate. We'll catch up soon.
Mate. Appreciate it.